G'day and welcome to episode 15 of Travel Pointers, the podcast for Australian frequent flyers. It's the 21st of July 2025 and I'm Matt Graham, the editor of Australian Frequent Flyer.
And I'm Wilson McTaggart, a writer at AFF and part of the Frequent Flyer concierge team.
Well, Wilson, last week the Reserve Bank of Australia dropped a bit of a bombshell announcing reforms to Australian credit card fees. And there's definitely some good stuff in there, but there could also be some perhaps unintended consequences when it comes to earning frequent flyer points in Australia, and not in a good way. We'll talk about that shortly. But first, just a few of the other headlines from the past couple of weeks. Cathay has announced some changes to earn rates on its frequent flyer program. If you're booking some of the cheaper economy fares, you'll soon be earning fewer status points and Asia miles, but they're increasing earn rates for premium cabins, which is kind of a common trend. Qatar Airways has announced a new subscription program, Privilege Club Pro. Now, what's that about, Wilson?
Yeah, so Qatar Airways is following the model of British Airways, offering a fixed amount of Avios per month over a period of 12 months for an upfront fee. This can be a really good way to get a bunch of Avios, which are really valuable currency to use for flights, especially to Europe.
So British Airways and Finnair, which also use Avios, already have subscriptions where you can buy Avios, with a monthly deposit going into your account. How does the pricing with Qatar compare? Is it a good deal?
It's pretty much the same as British Airways. It's about 2 Australian cents per Qatar Avios, which is a pretty solid deal.
Okay. Well, what's not quite a solid deal, I'm not sure about the segue, is Qantas is increasing its domestic change and cancellation fees. Currently, if you have a ready deal ticket, you need to make a change or cancel it. It costs you $99. That's going to go up at the end of this month to $110. Qantas has also recently made changes to Green Tier. Now, Green Tier was introduced in 2022, and it's basically a way that you can earn 10,000 points or 50 status credits a year by completing activities which are supposedly, sustainable, or at least which, that's the theory anyway. Qantas has unfortunately made it quite a bit harder to earn Green Tier. Like, they've removed quite a few of the options, and certainly the easier options for completing those 5 activities. And I mean, now, for example, one of the 5 categories that you need to complete is buying wine, which the only way to do it is to buy like eco wine from Qantas Wine, and Qantas Wine doesn't deliver anymore to Northern Territory. So if you live in Northern Territory, then that's not even an option. They've also removed the option to, for example, offset your home and car. And so now to complete the activity in that category, you'd need to either get like a Red Energy eco plan or something like that, buy solar panels, or complete 3 recycling pickups at your home. Which is it's just a bit of a faff, to be honest. I think this might actually change the equation for Green Tier. What do you think, Wilson?
Yeah, I agree. I was looking at some of the activities you have to do, and it ends up costing you a few $100s. And I mean, if you literally can't fly for the status credits, then maybe it's worth it. But I fail to see why I would engage with it, to be honest.
Yeah, I'm lucky. I just completed my 5th activity just before they brought these changes into effect. And one of the activities that I had completed was offsetting my digital purchase of a home and car offset for $1, and that got me one of the leases that I needed. That option's gone. Both of those options are gone now. I don't think I'm going to renew it next year, even though I do value the 50 status credits. By the way, there was a third reward option, which was that Qantas would offset 3 tons of carbon emissions on your behalf. That option is gone. I believe no one was really choosing that option, and fair enough. One other thing that I did notice is that Qantas is no longer using terms like carbon offset or like make your delivery climate positive, those kinds of things. I'm just guessing here, but I wonder if maybe a lawyer had a look at some of those terms, and maybe they were a bit worried about being accused of greenwashing, because the carbon offset program is now called something like a voluntary carbon program or something like this. So I'm not sure what's going on there. Now, the final headline is Qantas is now providing live music in its Sydney Qantas Club Airport Lounge on Friday and Sunday evenings. I saw this myself a couple of weeks ago. I was kind of surprised. I hadn't seen it before. The feedback online has been mixed. There has been definitely a lot of people saying that they quite like it, but there have been other people saying that the lounge is too noisy, and that when Qantas advertises its club lounge as being a quiet place away from the bustling terminal, they do in fact they do even use the word quiet on their website for marketing Qantas Club. That's not really what it is when you've got live music playing. I don't know which camp are you in, Wilson.
To be honest, I actually don't mind the idea. I think it's a little bit niche, and I get that for some people it might not work, but on a Friday or a Sunday afternoon, work isn't really what I'm thinking about. I don't need to make that many business calls, I guess, on at those times. So I'm for it. It's a bit different, and I don't mind that.
So, Australian Frequent Flyer is primarily an online community, but of course, it is made up of lots of real people, real travellers and frequent flyers and point enthusiasts who have lots of stories to share. And one way to get more involved in the community is to come along to a member gathering. And AFF has held weekend gatherings in different cities around Australia for the past 18 years. This year, it will be in Melbourne, won't it, Wilson?
Yep, so from the 21st to the 23rd of November 2025, you can join us in Melbourne for some activities, for some dinners, and you'll even get to meet us if you want.
If you want to. Is that a selling point?
Well, maybe. There'll also be a lot of other people there as well, which is great. We might even have a guest speaker or two, which not promising, but fingers crossed. But now registrations are open, so go to the Meetings and Social Events Forum on AFF or check out the link in the show notes to register. So, Matt, last week the RBA released a consultation paper looking at Australian credit card fees. What do these changes mean for Aussies, especially for those who collect frequent flyer points?
Well, the changes are a bit of a mixed bag. I mean, we kind of got a hint already a little while back that the RBA was looking at banning debit card payment surcharges, but it turns out that they're looking to sort of expand these reforms quite substantially beyond that. So there's kind of three big things that the RBA wants to do, as well as a few other smaller things which are not so interesting to us. But like the main ones would be basically banning debit and credit card payment surcharges. Now that's I think most people would agree that's probably a good thing. I mean, some businesses might be a bit disappointed that they won't be able to pass on the cost of accepting card payments. But the idea, I guess, is also that those card payment, the merchant fees that they pay to accept card payments will also come down over time. Interestingly, Australia is one of the few countries that it's really common to pay credit card surcharges. So I think that's a good thing. There's also going to be more transparency around card payment fees, particularly for businesses and in terms of the merchant fees that they pay to accept card payments. But the big ticket item, the one that is probably going to be of the most concern to frequent flyers and point collectors and points enthusiasts in Australia is the interchange fee reductions. So the RBA thinks that the interchange fees that businesses are paying to card providers currently are too high, and they want to reduce them. So for those who are maybe not familiar with terms like interchange fee, so basically when you go to your local coffee shop and you pay for your $5 coffee with a credit card, it might be a Visa or a Visa credit card or a MasterCard or whatever it might be, the business pays basically a fee to its merchant. So so for example, if they're using like a NAB FPOS machine, then the card basically the coffee shop will pay a small fee to NAB, which is the merchant fee. And then NAB is also going to pay a fee to the issuer of your credit card. So if you're using an ANZ card to pay for your coffee, then NAB is going to also pay an interchange fee, it's called, to ANZ in this case, or whatever it might be. Now, in 2017, the Reserve Bank introduced new sort of caps and benchmarks on the interchange fees that banks can charge. They basically made them a lot lower than what they used to be. And the result of that was that on the day, pretty much exactly on the day that these changes came into effect, these new interchange fee caps, most of the Australian banks reduced the amount of points that customers would earn for credit card payments. So the amount of points per dollar that you would earn in some cases went down by half. And a lot of the banks, either then or shortly after this time, also introduced caps on the number of points that you could earn for your card payments each month or year in some cases. And in some cases, they sort of they introduced this new rules where you could only earn points at the full rate up to a certain spend each month. And then if you, any spend you made beyond that would earn at a reduced rate, which is usually half or a quarter or so for that month or for that year or whatever it might be. And that's those caps have kind of become quite common now on consumer credit cards in Australia, unfortunately. Now, I want to go into a little bit of detail, and I hope I don't bore anyone here, but I just want to kind of explain what exactly the RBA is proposing, because there's been a lot of talk in the news and on forums about that the RBA is trying to slash your rewards points. But I just want to have a look at what exactly they're proposing. Now, currently in Australia, the RBA has benchmarks and caps on debit and credit card payments, and they're not quite the same thing. So a cap is the maximum that the interchange fee can be, and basically the interchange fees on different types of cards are not exactly the same. On the higher end cards, like a signature card or an infinite card or a platinum card, the bank is able to collect a higher interchange fee than on like a more basic card, like a low fee card or one that earns fewer points. The cap is the maximum that the bank can collect for a Visa or a MasterCard transaction, and that's currently 0.8% of the transaction value. The RBA has also set a benchmark, which is currently 0.5%, which is basically what they expect kind of the average interchange fee to be on all of the transactions that are going through the networks, like Visa and MasterCard networks. And so some of the interchange fees might be less than 0.5%, like on some of the cheaper cards, so to speak. There's also benchmarks and caps currently on debit cards. The benchmark is currently 8 cents and the cap is 10 cents, or 0.2% of the transaction value for debit cards. Now, what the RBA is proposing, they've got kind of 5 policy options which they're considering, which they've published in their consultation paper. Now, if anyone is really interested, you can go to page 28 of this consultation paper. The entire document is 137 pages. I have read it. I don't necessarily recommend that you do unless you're interested in economics and finance. It happens that I am, but I don't think it's particularly entertaining reading, and some of the language is quite hard to understand, to be honest. So the 5 options, the first option is to just do nothing, keep the status quo. The second option would be to reduce the credit card cap to 0.3% and to remove the benchmark. So basically what that means is that those cards, like the higher end cards where the bank is currently collecting a fee of 0.8% every time someone spends money on that card, that would reduce to 0.3%. Now that's the second option. The third option is to reduce the credit benchmark to 0.3% and the cap to 0.5%, which would be less extreme, I guess. The fourth option is just really relating to debit cards, and it's quite complex, so I'm not going to go into that. And the fifth option is to apply separate interchange fee regulations that only apply to consumer credit cards. So they would take option 2 or 3, so basically reducing the cap or the benchmarks only on consumer credit cards, like personal cards, and the 0.8% cap, which currently applies, would continue to apply for business card and like corporate cards, like commercial credit card transactions. So that's what the RBA is actually looking at, and I think it's important just to look at that in a little bit of detail, directly from the RBA. What are they actually considering, rather than just fear mongering and speculating? Now, and I think probably they're going to go with option 2 or 3. If they would reduce the cap down from 0.8% to 0.5 or 0.3%, that does have a substantial impact on the amount of points, basically, that the bank can afford to give you when you spend money on that card. So if you've currently got like a Visa or MasterCard card where you're currently, just for example, earning 1 Qantas point per dollar spent on the card, if the bank is now collecting potentially less than half, for each dollar, so the fee that the bank is collecting each time you spend on that card is less than half, the amount of margin that the bank is earning on the transactions is significantly lower, and unfortunately there's just less of a pie to go around. So I mean, one option the bank would have is to just sacrifice its margin and continue giving you 1 point per dollar, but you can be pretty sure I don't know, what do you think, Wilson? Can you see the banks doing that?
Historically speaking, banks sacrificing profit margins isn't something I've seen too much. I don't know about you. You've studied economics as well, so you have a pretty good idea of this.
I don't think that's going to happen. Just a spoiler. um, Probably the most likely thing is that that card earning 1 point per dollar is going to go down to 0.4 points per dollar spent, or maybe like one point per $3 spent, or something like that. That's pretty significant. So if you've got, for example, if you're spending an average of $50,000 a year on that card, instead of getting 50,000 Qantas points a year, you're going to be getting maybe 20,000 Qantas points a year for the same spend. That's not great. In fact, it's really, really quite bad. Other options that banks would have, I mean, what else? What else do they have in their wheelhouse? Wilson, they can increase the annual fees. They can lower the cap of how many points you can earn per month. They could remove other benefits from the cards.
I think the big one that I'm worried about is reducing sign-up bonuses to compensate for the lack of profits. And for those in the churning game, you can already see, I guess, some limitations to churning credit cards versus past times. So that could be a further route to go down.
Yeah, and that's before even these changes have come into effect. And so, I mean, we've already seen that the offers are starting to become a little bit less generous, like, with fewer points an offer. With exceptions, I would point out, there's still definitely some really, really generous sign-up bonuses available. And that's really, in my opinion, that's where a lot of the value now lies in the Australian credit card market, in those sign-up bonus point offers. But we are starting to see banks sort of cracking down on people sort of churning through offers. Like, a lot of banks have now increased the exclusion period. Like, so the time that you need to wait after you cancel a card before you can apply for another card with that bank and get another sign-up bonus. In many cases, it's now 2 years instead of 1 year. And we've also seen that a lot of the sign-up bonus offers that the banks are now offering are basically require you to keep the card open for at least a second year. So you might get like a first round of bonus points in the first year, and then you only get the full bonus if you renew your card for another year and pay another annual fee.
Which has sort of the double-edged sword of you have to pay the extra annual fee. And it also means you can't churn that card again sooner because you have to keep the card open. So they are really looking to sort of clamp down on churning.
And to be honest, if I was the bank, I would do that, because I mean, it's like, it actually makes sense from their perspective.
Oh, exactly. It is still a, I guess, small minority of people that are churning credit cards compared to the Australian population.
Yeah, and so at this point, it's still worth it for the banks to offer those generous sign-on bonuses. But if the margins they're earning on all of those card transactions are reduced, yeah, something will have to give, unfortunately. Now, it's not guaranteed. I mean, the RBA has proposed to bring in these regulations on the 1st of July 2026. But option one, as I just went through, in the document, they've outlined the 5 options. Option one is to do nothing and keep the status quo. So that is still a live possibility. And I would also mention the RBA is taking submissions from the public, from interested parties. You can send them an email or send them a letter until I think it's the 26th of August, with your feedback. So if this is something that concerns you, you can submit feedback to the RBA. They are in the consultation process. I don't know if one consumer will make too much of a difference, but if 1,000 consumers get in touch with them, then I don't know. Who knows? We'll see. Now, interestingly, the RBA regulations do not directly affect American Express, which in theory is a good thing. So it means that, I mean, American Express could still charge higher interchange fees, and then also therefore be able to afford to pass on higher rewards to customers. What we saw, though, last time in 2017, and American Express didn't immediately make major changes, but within 2 years they did reduce the earn rate on a lot of their cards, and also reduce the value of points that were basically existing points that were sitting in American Express accounts at the time of that change. They did give notice, so they gave like several months of notice, and so that was good. But eventually, basically what happened is that the competition kind of forced American Express to reduce its merchant fees, because a lot of merchants otherwise wouldn't accept American Express, and so they do obviously they do follow what's going on in the market. They need to remain competitive, and I don't know. It wouldn't surprise me. Of course, I don't know. I'm guessing here, but it wouldn't surprise me if they did eventually follow with sort of similar reductions in the fees that they're charging to businesses for accepting card payments on American Express, and that's something that the RBA even explicitly predicts in its consultation paper. One other reason that I think, that the likely change would be, a negative effect on sign up bonuses and on the own rates on cards is that, well, you just have to look at Europe. Currently, I mean, in the European Union and in the UK, interchange fees are heavily regulated. And, well, Wilson, you've seen the credit card market over in Europe. How is it?
It's pretty barren. I think there are still sign up bonuses in the UK, but they're mainly for very high annual fee cards, like the UK equivalent of the American Express Platinum card.
But even that sign up bonus is not extremely high.
No, it's not high. You have to spend a fair bit of money to get it, and the annual fee is really high, and that's what they're banking on, right? They're banking on getting these high annual fee payments to cover to offset the sign up bonus.
I mean, like we've been very lucky for a long time, I have to say, in Australia. Like I've definitely taken advantage of all of the benefits I can get out of credit cards and the sign up bonus offers, and the ability to earn frequent flyer points or points that I can transfer at least into a frequent flyer program on my spend. And often, like I have a lot of friends over in Europe. Often they'll ask me, "Oh, like how do you afford to travel all the time?" And the honest answer is on points. And then they ask me, "Oh, how do I do it?" And if for someone living in Europe, the credit cards is just not really a viable way of earning lots and lots of points. Like even in somewhere like the Netherlands, like I had a look a while back at the sign up bonuses on American Express cards there, and like even on their like high like top tier like American Express Platinum, it might be like 10,000 points or 15,000 points.
Wow.
And some of the mid tier cards, the sign up bonus might be like 4,000 points, if anything. So there's just less margins to go around.
No, and it just like, why would you bother at that point, right? And as you said, we've been blessed. I think realistically, we're probably second to the US in terms of the variety of different credit card options that we have to earn these frequent flyer points. But I mean, it's airlines and banks are catching up as well. Smile because it happened, kind of thing.
I mean, I don't think we need to give up just yet. And I mean, there is a very popular long-running thread on AFF about how to get a US credit card. And I mean, the US market, well, currently the interchange fees in the US market are a lot higher. I'm not sure if they're even regulated at all. So that could still be for those who, it's a lot of work. I haven't personally done it. I don't necessarily recommend it, but it is something that some people have done and think is worthwhile. I mean, if the US starts regulating interchange fees as well, then I mean, who knows where that goes? But I think now, what's that thread called, Wilson?
Yeah, it's strategy to obtain a US Amex.
Okay, so I mean, if you're interested, this thread is currently 629 pages. Thousands and thousands of posts. I kind of don't believe that, but yeah, it's one of the most popular on AFF. We'll see how that goes. That said, the changes aren't all bad, are they, Wilson?
No, I think that the RBA wanting more transparency from banks, and they've said this in their paper, that merchant processing fees need to be outlined by the provider. I think that's always a good thing. And reducing credit card fees, let's face it, AFF is a bit of it's not a gated community, but it is like its own little bubble. And so obviously we're in it for the frequent flyer points, but maybe a large part of the public isn't. So reducing fees on credit cards, which obviously are becoming more and more popular as we move away from cash, that is generally a good thing.
Yeah, I mean, millions of Australians do have frequent flyer point earning credit cards and will be hit by this. But I guess it swings and roundabouts.
Yeah, of course.
Well, I hope that discussion helped explain what's going on. This is definitely something we're going to be keeping an eye on over the next year or so, and expect a lot of changes in the Australian credit card market if what the Reserve Bank is proposing does come to fruition. Well, that's all for this episode of Travel Pointers. We'll be back with another episode on the first Monday in August. And until then, I hope you enjoy all of your flying.
Thanks for listening.